Everybody, what's happening? It's Bill with Franklin Loan Center, and it is Wednesday, January 18th. Over the hump of the first month of the year is insanity, but it is where we are. So, headline says it's happening, right? And so, what do I mean by that? Well, it kind of looks like things are going kind of as we had been predicting for months now, and that is that inflation's kind of continuing to show signs of dropping off, and that we hope is going to continue to bring rates down. You can see it brought, I mean, we watched it run as inflation continued to run up. We watched interest rates run up, and now we're seeing inflation coming down, and we're watching interest rates follow. It's pretty damn cool. It's nice to see it when it works out the way it's supposed to be. Now, just a couple of months of data doesn't mean we're out of the woods, but we saw CPI come in a little bit better than expected last week. Producer price index came in a little bit better than expected this morning. We're seeing retail sales drop off. Those are all signs that what the Fed is doing is having the desired impact. It's going to slow things down. It's going to drop demand. Just going to drop prices, right? I mean, that is absolutely what we should see happening. And the question is how does that pertain to real estate? Well, as interest rates come down, that's going to put more people in the market. And like we have been saying, when the rates come down, it's going to drive more and more people into a market that already has really constricted inventory, right? I mean, one of the big stories right now is, historically speaking, I remember I for years, I always talked about people on average will move once every 7 years. Every 7 years, every 7 years, it was like clockwork. It felt like since the beginning of time, people would move every 7 years. Well, that number's over 11 years now. And one of the things that's making people really sticky in their houses is the crazy interest rates that they got a couple of years. So that number might even continue to go higher, right? So there's going to be a bunch of people that would normally be sellers that aren't going to be because they're attached to that rate. And it's going to keep inventory levels down. And it's going to, so if any amount of additional activity from buyers is likely to get gobbled up really quick by whatever inventory is showing up, and it could very well create upward pressure in prices, home prices, and that would be, that's what we're talking about is likely to happen. So another little tidbit that came out yesterday on a leadership call with Franklin, and they talked about Walter, our fearless leader. Talked about the how the first 2 weeks of this year have been sort of the best 2 week period for activity in the last like 6 months, right? So that's a good sign as well. It kind of means everyone's coming out from underneath their holiday rock early and starting to get after it. So I just cross my fingers. It certainly looks like things are starting to happen right now. We're coming out of the gate strong, and hopefully these rates will continue to come down, and it'll, we're expecting probably a pretty decent first quarter, and certainly get into Q2 and Q3, we could really see things take off again. So I'm Bill with Franklin Loan Center. Please like, share, comment, all that good stuff, and I'll see you all next week.